Hello. Today, in less than 5 minutes, K&G International Advisors will give you a summary of last week's most important international financial news, focusing on the current hot inflation, higher interest rates, and what this means for investors. Volatility declined last week, although it remains above its long-term average as the market digested the first monetary tightening from the U.S. Federal Reserve since the pandemic. Last week, Federal Chairman Jerome Powell released further commentary on the likely path of interest rates. His comments suggest that the tightening path for the U.S. could be steeper than expected, with a rate hike of 50 basic points next month. The market now sees a better than ever chance that this will be the case. In fact, markets now think that the Fed could likely hike by 50 basic points in May and then again in June. That could leave us with a federal fund rate as high as 2.25% or 2.5% by the end of this year. This is a major upgrade from the expected 1.9% year-end level policymakers were forecasting a few weeks ago. For an explanation of what's going on, look no further than the inflation numbers. Consumer prices continue to surprise to the upside, with hot inflation data showing continued prices rises for consumers around the world. These most recent inflation data do not include the likely impact from the Russian-Ukraine war, which has pushed up commodity prices even further. Higher inflation expectations in markets will typically manifest a higher interest rate demanded on corporate debt, which we have started to see in recent weeks. Hot inflation also puts the world's central banks in a bind. Do they wait and see whether inflation will come back down, cooled by a major supply-side response to high prices, or is the right solution to act early and tame inflation with higher interest rates? So far, the policy of central banks has been very much the former. Wait and see, then hope the global supply response to higher prices tames inflation. In the meantime, rather than betting on the outcome, investors should be focused on weather-proofing their investment portfolios to achieve solid returns through higher or lower inflation, higher or lower interest rates. In our view, this means a relentless focus on valuation and gaining exposure to structural growth themes which are indifferent to macroeconomic outcomes. The sources used on today's video were Yahoo Finance, Bloomberg, and Dominion. My name is Juliana Lato from K&G International Advisors, and we wish you an excellent start of the week. Also, we'd like to thank you for watching our video. Don't forget to subscribe to stay updated on all the important financial news, and don't hesitate to contact us if you have any queries or further comments.